Welcome to episode 1 of the Forex Show. A big welcome to everybody. Thank you so much for being here, for watching this video and listening to me today. This is episode 1 of the Forex Show. A big welcome. If you know nothing about me, my name is Samuel Morton. I am a professional Forex trader and have been trading for over a decade now. I had a lot more hair when I first started trading. It's unfortunately nearly all gone now, but I've been trading for over a decade. I love Forex trading. I love price action. But this is episode 1 of the Forex Trading Show. In this episode, I've got some great content for you. I have a topic to go through with you. I have some analysis. I'm going to share my analysis for the next month. I have a book that I want to recommend, a brief Q&A session, and lots of other things for you. This is totally for free. This is episode 1 of many episodes to come. So thank you for being here today, and let's jump right in. So the topic for episode 1 is trading tools that I use for my Forex trading. So these are tools that complement my Forex trading. These tools I'm going to go through with you today and discuss are tools I use on a daily basis, and what's great about them is they're all for free. There's no cost involved in any of these tools. You may use some of these tools yourself, some of them may be new to you. If you have any questions or comments or any tools that you use, obviously use the YouTube comment section below. I want to make this as interactive as possible, so feel free to leave some sort of question or comment in the section below. The topic for episode 1 is trading tools that I use in my Forex trading. So these are tools that I use on a daily basis. They're tools that I really rely on to help me trade the Forex markets profitably. And the great thing about all these tools I'm going to go through with you is that they're all for free. There's no cost involved whatsoever. If you head over to my website after this episode, there will be a blog post for this episode and for all future episodes. And there will be links on that post for all the trading tools that I'll be going through in this video. So please head over there after this episode. So let's jump right in. If you have any questions along the way, then leave a comment, a question in the section below. Feel free to share any tools that you use. I want to make this as interactive as possible, so please use that section below to ask your questions. I will get back to you. Leave a comment. Okay, so the first tool that I want to go through, you may already use this yourself, you may not. Some of these tools you may already use on a daily basis. I'm going to go through everything that I use, and I promise you there is going to be a gem for you in this episode, no matter how experienced you are as a trader. So the first tool that I use on a daily basis, which is totally for free, is a economic calendar. Now what the economic calendar does is it tells you of scheduled news events that are approaching, that are going to impact the currency markets. So my calendar looks quite blank simply because I've filtered it just to show major scheduled news events. But if you go onto a economic calendar, it will look something like this. So you can see there's multiple news events every day that can impact the currency markets. This is the one at Forex Factory. You can just click on the link on my website and see the calendar. You can open a free account with Forex Factory. You can see I've got a profile up here. There's no cost whatsoever to have a profile with this website. There are other economic calendars available, but obviously they all show the same information. So this is how things look. Now what I do is I filter the news events just so the major news events or the high impact events are showing. I'm not really interested in events that could cause no volatility or a little volatility. I'm only interested in these major news events. It really helps clear the calendar, makes things a lot more simple. So you can see this coming Friday, which is tomorrow, there's Euro news twice. Next week, we have Australian dollar news, US dollar news on Wednesday, and so forth. Now, the way I use this calendar is two reasons, really. It's two ways I use this calendar. First of all, I use the calendar to help me know whether to keep positions open or not, and to adjust positions. So, for example, with this Euro news that's approaching tomorrow morning, if I have positions open or a position open tomorrow morning just before this news, I could potentially take some profit. If I wanted to off a position, I could potentially close the position down. I could adjust the stop loss, adjust the take profit, because what I'm expecting is some sort of volatility, some sort of movement on euro pairs caused by these high impact news events. So it really gives me an opportunity to review a position and decide if any adjustments need to be made. Now, it's not clear in the sense that if news is approaching, I've got a position, I do this or I don't do this. It really depends on how long I've had the position open, how close it is to my stop loss, how close it is to my take profit, how close it is to my entry, how big the position is. It really depends on a lot of factors what I decide to do. But to summarize and to try and make things as clear as possible, what I do is review any positions just before news events that have exposure to the scheduled event. It just gives me a chance to make adjustments or take profit if I need to. The second way I use this calendar is for opening new positions. So let's say tomorrow morning at 7, half 7, or even 8 o'clock, I see a potential trade that I could open on a euro pair. What I would likely do is wait for the news to be over and then look to open the trade. I tend not to get into trades just before major scheduled news events. So they're the two ways I use this tool. Hopefully that helps you. I guess to summarize those two principles, those two ways I use this tool, it's all to help me manage risk. Really, I'm looking to manage my risk, and the scheduled events, the high impact events, knowing when they're coming can help me to minimize my risk and exposure to these events. So that's the first tool I use on a daily basis. I check this every single day, usually twice a day, once in the morning, once in the afternoon. It's also just interesting to see. If you don't use an economic calendar, then I suggest you just use one just out of interest, just to see how the markets react to news events. Okay, so trading tool number 2 is a Pip Calculator. I use this on a daily basis. I use this every time I enter a trade. Pip calculators can look different. This is one that I use. There's another one at MyFXBook that I use sometimes. The reason why Pip calculators are needed is you need to know how much you're risking per trade. Now, if you're spread betting or something like that, you can enter a certain amount per point. So if you're spread betting in the UK, you could trade perhaps £2 per point. But when you're actually trading Forex, you're trading in lot size, and you don't know how much you're risking in dollar value or pound value, euro value per pip. So a Pip calculator lets you do that. So every time I'm going to open a position, I calculate where my stop loss is going to be, where my entry is going to be. Then I use a Pip calculator to ensure that I'm risking what I want to risk on the trade, that the position's not too small or too large. So once again, it's really about managing risk. But that's a Pip calculator, once again, totally for free, and there will be links on my website blog, so just go over there and have a look. Now, the next trading tool that I use on a daily basis is TradingView. So this is charting software. I cannot recommend this software enough. If you do not have an account with TradingView, then go and open one. I've been trading for over 10 years now. There is no package that I've used personally that is better than TradingView. The charts are very clear, they're very versatile. You can have Forex, stocks, commodities, ETFs, it's all listed, indices, it's all in the software. And once again, it's for free. If you want a basic account, it's for free. If you want some of the added features, like having multiple charts open on multiple screens, you will need to open an account that you pay for, which I've got. But the basic account is for free. So just go and use it. I love TradingView. I might sound like I'm a salesman for TradingView or a shareholder for TradingView. I'm really not. I love the software and just cannot recommend it enough. I use it on a daily basis, and I've got to the point in my trading that I would be totally lost without TradingView. I really rely on it. Very good software. Never had any issues with it. It's absolutely fantastic. So go ahead and open a free account. Now, the other trading tool, and the last trading tool that I'm going to go through, is this here, which is MetaTrader. So I use MetaTrader on a daily basis, not so much to analyze charts, because that's what I use TradingView for, but I do use MetaTrader to open my trades. So this is the platform I use with my broker to open trades and to manage trades that I have open. I find that the combination of TradingView and MetaTrader works very well. So TradingView to analyze the charts, MetaTrader to open trades and manage positions works very well for me personally. Might not work well for you, but this is another tool that I use on a daily basis, and I'd be lost without it. So they're the tools that I use. There are a couple of other things that I will mention. One is sticky notes. So sticky notes here on Windows. There might be something similar on Macs. So with sticky notes, it's great to make notes on. What I tend to do with sticky notes is make notes on during the day. You can create a watch list, perhaps for the day, on your sticky note, and it's showing on your monitor throughout the day. It's also good to make notes of prices, potential entry and potential stop loss prices, take profit prices, especially when it comes to calculating your position size or pip size. Recording those prices can really help make sure that's calculated correctly. So I use sticky notes quite a lot. I also have a notepad and a pen. Obviously you could use paper and pencil, whatever you want, but I use this also to take notes on. It's a bit quicker for me sometimes than using the sticky notes. So I use a combination of the e-notes and the notes on my desk here just to make notes throughout the day. It's great for watch lists, great for making notes of prices, calculating pip sizes, that sort of thing. So they're the trading tools that I use on a daily basis. I really hope that has helped you. These topics for each episode will be suggested by you. So if you have a topic for episode 2 or episode 3, episode 4 that you want me to discuss and talk about, then please suggest that in the YouTube section below. So this episode's recommended trading book is Come Into My Trading Room by Dr. Alexander Elder. I have read so many trading books over the last decade. To be honest with you, I have not read any trading books whatsoever, probably for 2 or 3 years now. I found I got to a point in my career where I was learning very little from trading books, and I should probably be the author of a trading book rather than reading a trading book. So I haven't read any recently, but the first 5 to 7 years of trading I read a ton of books, and this stands out as one of my all-time favorites. As it suggests in the subtitle, it's a complete guide to trading. So it doesn't just cover strategy or psychology, it covers a wide range of trading principles that you need to know in order to be successful in your trading. If you're looking for a good all-round trading book. This is it. It's absolutely fantastic. I cannot recommend it enough. I even don't have my copy anymore. I got rid of all my trading books. I gave some away. They've just all gone now because I read them all multiple times and no longer needed them. But this is a great book. I highly suggest it. One of the things that really sticks out from the book is the 3 M's, which is method, such as strategy, system, plan. So method, money management, so risk management, and mind, which is the trading psychology. And they're the 3 things I really focus on. They are the 3 crucial pillars or stones, whatever you want to call it, to creating a successful trader. Method, mind, money management. They're the things you need to focus on, and they're the things that stick out from this book. So I highly recommend it. Once again, there will be a link on the blog post. You can order it in the States, in Europe, in the UK. It's available internationally. So this episode's analysis is all about the Australian dollar and the Japanese yen. We're going to start with Australian dollar, Canadian dollar, and this is the weekly time frame. Nice clear downtrend on the weekly that has recently broken. So we had lower highs, lower lows. Now we have higher highs and higher lows. The moving averages confirm the uptrend. They've crossed bullish. Now focusing on the most recent price action, we have potentially a bullish channel here, and price is testing that channel support area. What's also interesting is price is testing a weekly moving average. Price usually reverses at moving averages. Just look at how price has reacted at these moving averages in the past. So potentially we could have a reversal around here. On the daily time frame, there is a previous diagonal resistance coming across the screen like this that's already acted as support. So if the channel support breaks on the daily, there is this diagonal level a bit lower down. There's also a number of horizontal levels that we could draw, such as this level here. Going back to the weekly, the level's slightly higher if we place our levels on candle bodies. So looking for long opportunities in Australian dollar, Canadian dollar, as per the areas identified in this analysis. Australian dollar, Swiss franc, let's have a quick look. I am going through these charts pretty quickly because obviously I don't want this analysis to be really drawn out. Australian dollar, Swiss franc, we have very similar sort of price action. So we have a clear downtrend, nice clear inverted head and shoulder pattern, and a swing higher, moving averages crossing bullish. So potentially the start of an uptrend here on Australian dollar, Swiss franc. So looking for buying opportunities. Previous swing high here may act as support. If you're interested in fib levels, we could do a fib retrace tool here, which could create buying opportunities. And if you combine these things with moving averages, then potentially as price comes down, you have a horizontal level with a 50% fib level and with dynamic support from a moving average. Going to the daily time frame, there are further horizontal levels that we could draw that also match with fib levels from the weekly. So keeping an eye on Australian dollar, Swiss franc, as price continues that retrace move, there could be buying opportunities. Australian dollar, Singapore dollar, another clear downtrend on the weekly. Price has been coming down, recently broke a bearish channel resistance area that has since acted as support. If I just clone this line and bring it down here, so you can see very clear channel resistance. Price was reversing around support and resistance of the channel, broke to the upside, now acting as support. Once again, we have higher highs, higher lows, and bullish moving averages on the weekly. So looking for buying opportunities. This is the start potentially of a long-term uptrend. So we could see things go like this. Looking to buy, obviously around that previous channel resistance as support. We also have weekly moving averages Nice clear horizontal level here, and one just here also. Going to the daily time frame, not too much else to mark apart from this potential support area here. Each of these Australian dollar pairs has potential resistance, such as diagonal resistance and horizontal resistance. Let's move on to some yen pairs, Euro Japanese yen. Let's go and have a look, see what's happening with Euro yen. Very similar price action to Australian dollar pairs in the sense that price was downtrending and has recently broken higher, and moving averages have confirmed the trend by crossing bullish. Once again, we have a potential bullish channel here, so I'll be keeping an eye on that. There's also horizontal levels that we could draw, all based on the weekly here, just looking at previous swing highs and also new swing lows. As price comes down, we can use our retrace tool to create some fib levels, but we're not quite in a retrace move yet, so I won't mark that on the chart. On the daily time frame, we have a diagonal support coming up here, which actually looks like a very clear trend support, but those with a keener eye will actually know that this is a bullish channel support. It's not just trend support. So we have a daily bullish channel, which is more aggressive within a weekly channel. There's further horizontal levels that we could draw, looking for buying opportunities as price comes down. Now, one last chart that I'll look through, pound Japanese yen. Let's have a look at this. The reason why I've chosen this one is we had the same sort of thing once again. Downtrend that potentially is now an uptrend, moving averages crossing bullish on the weekly time frame. Very clear previous swing highs that may act as support as price comes down. If this is the start of the retrace move, then potentially we have some nice clear fib levels too as price comes down. And then on the daily time frame, not too much else to mark really. It's all based on the weekly, is this trade. But as price comes down, I'll be looking for buying opportunities on pound Japanese yen. And if you can combine levels, you can potentially get on some really great moves, such as combining moving averages with horizontal levels, fib levels with moving averages or horizontal levels. You know, the more support there is or more resistance there is within an area, the more likely the trade is going to work out. These levels generally hold if there are multiple levels of support and resistance rather than just a single level. So time for this episode's Q&A. If you have a question that you'd like me to answer in a future episode, then post it below or drop me an email and I'll do my best to answer your question in a future episode. I have two questions I'm going to go through that I'm going to answer in this episode of the Forex Show. The first one is, how much do you need to get started? Now, I'm not sure if this person is referring to how much capital do you need in your first trading account or the costs involved in starting trading. So I'll answer both. How much do you need to get started? You need zero. So if you are a new trader, you don't need any money whatsoever. There's plenty of free content online that will teach you the basics of trading. As mentioned in this video, there are plenty of tools available that are absolutely free. There's no cost involved. You can open a free demo account with a Forex broker. They're usually unlimited accounts. You know, there's no time constraints on the account. You can keep it for months and years. You can practice with virtual funds. So there's no costs whatsoever to learn the basics and get started. Answering the second part of that question, how much capital do you need to get started? There is no set figure that I can recommend you. What I would suggest is, once you know the basics, once you are profitable on a demo, you will have a good idea of how much you need to fund your first account with. I always suggest starting small, but you'll know from your demo results the sort of money you will need to make the sort of profits that you want. Everyone's circumstances are different and everybody's risk levels are different. So there's no set figure for everybody, a figure that suits everybody. Just focus on the free stuff in the beginning, practice on a demo. You'll then have a good idea how much you need for your first live account. So hopefully that helps. I have another question here. Best advice for new traders. I'm assuming this is, the one bit of advice I would give to new traders, my top advice for new traders. My best advice is pretty much to echo what I just said. Learn as much as you can for free, but then when you are ready, pay for education. So many traders jump into live accounts, new traders jump into live accounts and start trading and then lose a lot of money. Sometimes they blow their whole account. This just shouldn't happen. It shouldn't happen. They should use that money to invest with someone like me or someone else. I'm not trying to have a sales pitch here. It doesn't matter who you learn from. If they're a profitable trader, just go with them. But learn from somebody who is successful in their trading. They can help you become successful. It's well worth the investment. So that's my bit of advice really, is learn as much as you can for free and then invest the time and money to learn from someone who's already experienced and successful in their trading.